Welcome to the Art of Money podcast with Art McPherson.
And thanks for checking out the Art of Money podcast. My name is Mark Owens alongside Art McPherson and Luke McCarty. All the information for the McPherson Financial Group, you can find it at theartofmoneyradio.com. The Fed is raising interest rates to fight the inflation, and Scott Menard with Guggenheim Investments tells CNBC that history shows us rate hikes are usually followed by a rise in the stock market.
Historically, 100% of the time after the Fed starts to raise rates, which ultimately leads to a recession, stocks are higher a year later.
All right, are you seeing this?
We're seeing this happen now. I would never say 100% like he did, but history tells us that the market is afraid of rising interest rates. But once the rising rates get here, the market settles down. And, rising rates isn't that bad when it comes to how you look at the economy, because it means the economy is doing really well. Unemployment is under 4%. Retail sales is really good. Industrial production is really good. There's a lot of positive indicators out there where raising interest rates is deemed almost a positive. Now, the point of it is to offset inflation and lower inflation. So, we do feel mortgages are already going up. They're kind of in the fours, so we may see housing slow down a bit. But yeah, historically, he's right. When rates finally start to happen, as long as they don't overdo them or surprise us at any meeting, which they didn't 2 weeks ago, it's usually a positive for the market.
Yeah, and the market hates uncertainty. Mm-hmm. There's one thing the market always will do. When you don't have a definite kind of direction from the Fed, it's an uncertain time. That's why as soon as the Fed starts to raise, there's certainty now. There's certainty back. It's not an unknown. You could see it with the Ukraine situation. Until the war actually broke out, the market had lost for a couple weeks there prior to that all kind of build up. But as soon as the war happened, then the market was like, okay, now we know what's going on. It's just that fear of uncertainty. A lot of times that'll have the market make these wild, crazy swings until the actual event takes place.
772-281-5223. And we've seen firsthand. Art, tell me, gas prices, somebody said, and correct me if I'm wrong, that to fill up a boat or any vessel on the water, boat gas is like 3 times more expensive than regular unleaded.
It's definitely more expensive because it's ethanol free.
Okay.
So whatever you put in a boat, you don't want to have ethanol in it because the lines and all the different things that are in a boat are different than in a vehicle. And it'll eat up and cause major problems in boat engines. So it has to be ethanol free. And because it's ethanol free, it's more expensive. Plus you're paying for it to be at the marina. So you're paying usually $1 to $1.50 more per gallon than premium.
Mm-hmm. True.
So it's not cheap.
And you've seen like DoorDash and Uber Eats and Lyft, they've all started adding gas surcharges onto whatever you're ordering. If you're getting food delivered, you're just getting a ride to and from an event, so you're going to be paying more. So essentially what we're saying is we're just getting hit on all sides because of these rising gas prices. And unfortunately, as Peter Schiff, he tells Fox News, it's going to get worse.
And when we got these inflation numbers and they're saying 7.9%, which is the worst inflation since 1982, what they don't tell you is that we had a different CPI in 1982. And if we use the same CPI today that we used then, we would be over 15% inflation, which means this is the worst inflation in our lifetimes. We're experiencing higher inflation now than anything during the 1970s. And this decade is just getting started. Inflation's got only one way to go, and that's up.
That felt very dramatic, Art McPherson. Like, I know it's their job on the CNBCs and the Fox News to really be in your face, but I mean, do you agree what Peter Schiff is saying there?
Yeah, no, he's right. I mean, the data, the government continues to change what they measure inflation on, because remember, whatever they're measuring for inflation, they also have to do that COLA for Social Security. So if they had been using, like he said in that example, what they were using back at the time we hit it 7% before, it'd be at 15 right now. That's true. All those data points, they're no longer using some of those data points. And that way, they would have to be raising everybody's Social Security by 15%, not by 7%. So the government usually makes changes that are not in our best interest. They're usually in their best interest, unfortunately. Mm-hmm. But it's because they really can't afford those kind of COLA increases on things like Social Security. We really need to fix it, but we haven't had anybody in politics really attack it. The only thing they've ever done is raise more taxes on the issue or make the full retirement benefit age older. They really need to go back in and and start putting money aside for the trust fund. So we really have it as a funded liability instead of an unfunded liability. There's all kinds of ways you could fix it. Just nobody has ever had the political will to address it.
Right.
Yeah, and think of all the money that's been printed recently. I think it's 30 to 40% of the U.S. dollars in circulation have been printed in the last 2 years. So that's going to cause inflation. I mentioned this about your home, your house, right? Is it really worth 40% more? On paper, yes, but there's just more dollars out there. So it is, the government had a tough decision when COVID hit. Whether they made all the right decisions or all the wrong decisions, that's another debate. But there was an excess printing of money that we're now feeling the effects of. And, that's just why everything's more expensive. And I believe in the 15% more than the 7.9%, because if you go to the store, you go to Costco, you go buy a steak. I mean, I started buying pork chops. I like pork chops.
The other white meat.
I like pork chops, but, not as much as the steak. And so there's certain things we're all cutting back on. And one of the best ways to fight higher prices is for prices to be too high and we stop spending. And we have several client examples of people who are going to go on a weekend trip or going to buy this and they're holding off and they're waiting. So I think that's going to start happening, and inflation hopefully just starts to come down on its own along with the Fed raising interest rates.
Well, we had a perfect storm feeding into this. We had 2 years of COVID. We had everybody ready to go on trips and travel and vacations, and they couldn't do it. And then that finally all opened up. And at the same time, we had all these supply chain interruptions from COVID, because we had this plant was closed still because of COVID. This one was open. This one wasn't. And all of a sudden, we started running into supply chain interruptions right at the same time that everybody was ready to go out and spend money again. So you had kind of this perfect storm to create a lot of this. So some of it, I think, will be a shorter term situation. But like Luke was saying, we have some long term effects that we have to go through from the federal government printing money. So it's just like a company like Apple. If they want to go out and raise $20 billion and they want to issue more shares of stock for that, well, if they go out there and do that and issue more shares of stock, it's going to devalue every share of stock that's out there. So when they do those kind of things, it has an impact that ripples through the whole economy of Apple. So it's the same thing we're seeing with our economy. When the government goes out there and prints money and it's not backed by anything, they're just printing more of it so that they can throw it into circulation. That's where we're feeling the effects.
Did you hear what we talked earlier about, one of the stimulus checks that came out during COVID? Did you see the administration proposed possibly doing next?
Yes.
Instead of just giving us checks, now they want to send us gas gift cards.
Yes, I did see that.
I did not see that. Yes. I knew you were going the gift card route, but I didn't know it was going to be gas.
Yes, to help fight some of these high gas prices.
You know what that's going to do?
You know what I have?
I have higher gas prices.
Right. I have a better idea than that.
Okay.
Just let Anwar drill again. We have more oil in Alaska and Anwar than Saudi Arabia. Let us drill and pump that gas. Turn on the pipeline again and do some of those simple things that you can do and it will probably be around $2 a gallon.
Why,
if you would do a couple of things like that.
Art, would we do that if I can get a gift card in my mailbox?
Yeah, I think that's just throwing, no pun intended, but gas on the fire, right? I mean, let's fight higher prices with free money.
Yeah.
Because that's going to drive it in the wrong direction.
Yeah, because instead of, downsizing from a truck to a car, I got free gas. I'm buying a bigger truck. I mean, it could go all directions there. It's crazy.
Instead of letting the market kind of make itself correct and allowing, like Luke was saying, I didn't buy steak this weekend. I bought pork chops. We get to a point where we start making our own decisions within the budget.
Yeah.
And we're starting to see it with housing. We've got a tremendous, same thing with housing because of COVID. You got people moving to Florida more than ever because they are moving out of states that were very, very restrictive. So you've created this huge demand in housing that we don't normally have, but it's a window. You're not going to have this many people probably 2 years from now trying to move to Florida because their states are open back up, things are happening. But the pain has been so brutal on so many people with their businesses and with their families, they're getting out of Dodge. So they've been coming to Florida and Texas are the big states that are the winners of people moving in states. But I don't think that'll last forever. I think this is a short-term thing, but because everything is out there at the same time is why we're seeing such high inflation right now.
Hey, Mr. President, can I get 9 gift cards? I'm trying to move from Chicago to Florida. Is that enough to fill up the U-Haul?
Thanks for listening. Want more from Art McPherson of McPherson Financial Group? Find us online at artofmoneyradio.com.
We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Securities offered through World Equity Group, Inc., member FINRA and SIPC, a registered investment advisor. Investment advisory services offered through ProStatus Group, LLC. McPherson Financial Group and ProStatus Group, LLC are separate entities and are not owned or controlled by World Equity Group, Inc. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Investment financial professionals are not licensed in all 50 states. Art McPherson is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Arthur McPherson. Florida Insurance License number A17475.
Today's show has been a work of art.